Super Microcomputer is currently trading at $41. Is this a buying opportunity? This is what I'm going to cover in this video. About a year ago, we made a video on SMCI's business model, financials, and valuation. We will leave the link in the comments below, as I will not be repeating this information in this video. So at $41 stock price, the market cap is at $23 billion. So in the past 12 months, SMCI made a revenue of $15 billion. The PE ratio is 20, which is considered not expensive. So for 2025, SMCI is expecting a revenue between $26 to $30 billion. This represents a phenomenal 74 to 100% growth in a single year. So the long-term goal of SMCI is to reach $50 billion in revenue, as they are investing in manufacturing facilities in San Jose, Taiwan, and beyond. Of course, this costs money, and they need to invest their profits back into their business. This is the reason why their free cash flow is very low. But before we get too excited about this amazing growth, let's have a look at their margins. Their margins are not good. As you can see on the screen, the gross margin is in order of the low teens percentage. So the net margin is in single-digit percentage. The free cash flow is negative in the past few quarters because they put a lot of money in capital expenditure. The gross margin dropped significantly in the most recent quarter. The management is saying the gross margin is down due to customer and product mix and initial production cost of the new DLC technology. It takes a lot of time and effort to make these videos, so please consider liking this video and subscribing to the channel. Before I show you the valuation, I want to clarify that this is not financial advice. We are simply recording our thoughts about SMCI. As usual, I will talk about two cases, one with reasonable assumptions and the other one with great execution for SMCI. So in the reasonable assumptions case, we are estimating 20% growth for the next 5 years. This will enable SMCI to make a revenue of $37 billion. Now, that's still short of their target of $50 billion. But this is a very competitive sector, and it's not easy to grow. Based on their very low gross margin, I'm estimating 8% net profit margin. I'm assigning a multiple of 20. I'm estimating no dilution. The stock price in 2029 would be $100. Based on the current price of $40, the gain for 5 years is 155%, which is amazing gain. Let me talk to you about the great execution case. I'm estimating 30% growth, with which they can get a long-term target of $50 billion of revenue. I'm estimating 8% net profit margin and a 25 multiple. The stock price would be 190 by 2029 in the great execution case of SMCI. Based on the current price of $40, this is a gain of 376% in 5 years. I'm seeing a great reward in case of the SMCI, but when I run the numbers, SMCI is accused of manipulating numbers and money laundering. So for me, I have zero tolerance to stocks like these. So I will not be touching the stock even if it gets to a single digit. Let me know your thoughts in the comments, and thank you so much for watching.